Hi, and welcome to this week's look at some of the major news stories that are affecting the market so far. And what are we going to talk about this week? Well, we're going to start with the NASDAQ 100 or US Tech Mini 100 at FXOpen. Then we'll take a look at how the dollar's been faring recently. And third and fourth, we're going to take a look at two of the largest companies, two major stock index influences and their Q3 earnings reports. So let's start with the NASDAQ 100, and that's consolidating ahead of the market leader earnings reports. So on Tuesday, we wrote that there were 5 companies with a market cap in excess of $1 trillion were set to release their quarterly earnings this week. Now, those 5 were Alphabet, or Google, on October the 29th, Microsoft on October the 30th, Meta, also October the 30th, and on the 31st, Halloween for some, Apple and Amazon. Now, obviously, these results and profit forecasts from these leading tech giants could fuel some serious momentum for the US Tech 100 Mini at FXOpen, or the NASDAQ 100. Now, if we take a look at the chart for the US Tech 100 Mini, we said technical analysis suggests that the index is in a state of consolidation. Now, supporting that view was the blue upward channel that you can see. That's based on key 2024 reversals, which are marked with bold lines you might be able to see there. Now, these show the price movement near the channel median, indicating a potential balance between supply and demand. Also, there's a narrowing triangle formation highlighted by those purple lines you can see, with the upper line aligning with a psychological level of 20,500. That reflects really a reduction in volatility, signalling consolidation in anticipation of the earnings releases. Also seeing a decline in the ATR indicator, reaching its lowest in approximately 3.5 months, which would also suggest subdued market activity. If tech earnings do surprise to the upside, it's possible the US Tech 100 Mini could break out of that purple triangle, setting its sights on a fresh all-time high, surpassing the peak on July the 11th. But we know how important these companies are to the index and to the US economy as a whole, so earnings report season really is going to be key. Okay, so whilst we're talking about the NASDAQ being in a bit of a consolidation phase, what's been happening with the US dollar? Well, that's continued its aggressive rise ahead of the US elections. Now, on Wednesday, we wrote that the dollar was reaching new highs, driven by rising bets on Trump's potential success in the upcoming election. And that really seems to have renewed its appeal as a safe haven currency. What have we seen over the past week? Well, US dollar against the Canadian dollar, that strengthened above the 1.3900 level. Dollar yen nearly tested the 1.5400 level, and dollar Swiss franc is showing signs of a double bottom pattern. Let's drill down a little bit further. Dollar yen. Technical analysis suggests the potential for further growth if the price holds above that 154.00 level, though a corrective pullback to the 152.3 to 151 range remains more than possible. Now, key events this week that are likely to impact the pair were and are Wednesday afternoon and early evening, we had US ADP non-farm employment change report and US GDP data and pending home sales. Now, currently the price, approximately the time of recording, is around 152.8. Going to be interesting to see where we go from here. Let's take a little bit of a closer look at the dollar against the Canadian dollar. It's in its 5th consecutive week of strengthening, now trading near the 2022 highs of 1.39 to 1.3970. Price action within this range is crucial for setting the pair's future trend. Should it break above that 1.3970, it may well accelerate the trend towards 1.41 to 1.43 sort of range. Now, conversely, a rejection at these levels could trigger a downward correction towards 1.37 down to 1.38. We've also got some key events which may well drive this pair coming up. Wednesday, US crude oil inventories and a speech by the Bank of Canada Governor Tiff Mackham. And on Thursday, we've got the Canadian GDP figures for August. Again, time recording around the 1.392 level. So still some drivers to come into play, certainly on the dollar CAD this week. Don't forget your risk management techniques. Okay, so we talked earlier about earnings season and how the NASDAQ 100 looked like it was consolidating before some of these major reports. We've had a couple, so we're going to take a look at those now. And we're going to start with Alphabet, Google. Now, their shares rose to $180 following the report. So on September the 10th, we said that Google shares were forming an ascending channel, which you can see in blue on the chart, and could begin to rebound from the psychological support level of $150 per share. We've indicated that with an arrow on the chart. Well, since then, the price did turn upward from that level, fluctuating in October between a support level of $160 and a resistance level of $168 per share, signalling probably some supply and demand equilibrium. That seems to have been changed a little bit by the earnings report. And what did that report actually tell us? Well, earnings per share, actual figure came in at $2.12 per share against an expectation of $1.84 per share. Gross revenue came in at $88.27 billion against an expectation of $86.39 billion. Now, investors were encouraged by statements such as that AI investments were really paying off. Well, post-market, say these reports do tend to come out post-market, there's a little bit of further trading. So post-market share price rose to about $180, indicating there was going to be a likely opening level on Wednesday's session. Analysis pre-market Wednesday suggested it would likely open up with that bullish gap around the level we were talking about, as the price was breaking above its range, crossing that $168 per share resistance. It also reached the median line of that long-term ascending channel, where a new buyer-seller consensus may well form. Now, if this bullish sentiment persists, the price may continue climbing towards its historical high near $190 per share this year. And in fact, according to a TipRank survey, 22 of 28 analysts currently have a buy recommendation for the share, and there's an average 12-month price target of $201.54 per share. So some upside there potentially. Well, Wednesday did in fact open around the, I think it was 182 spot for $1 per share. Did ease off slightly during trading, closed around the 176 spot $14 per share, affected by some of the other reports that came out. But overall, a good report for Alphabet and some reasonably positive statements coming alongside it. Okay, and to finish off, we're going to stick with earnings report season, and this time it's Microsoft's turn. But in fact, their shares declined despite a strong earnings report. If we look back to the 9th of October, when we did a bit of analysis on the share price of Microsoft, we suggested that it was forming an ascending channel, which you can see in blue. And we could see a rebound from its lower boundary, where that arrow is that you can see. Well, again, since that article came out, the price moved upward from the support level of about $111 per share, even surpassing $437 per share. However, following Microsoft's Q3 report, which was released post-market on Wednesday, the share price faced some heightened volatility. The report itself was relatively positive. Earnings per share actual came in at $3.30 per share against an expectation of $3.10 per share. Gross revenue came in at $65.58 billion, again against an expectation of $64.57 billion. So we have exceeded expectations, or I say we, Microsoft exceeded expectations. But despite that, the price fell to around the $410 per share mark. Now, a lot of people are saying that drop may well be down to rising expenses, and this was a little bit of a shock in the report. According to the Wall Street Journal, capital expenditure in 2024 hit $53 billion. That was about 28% of revenue. Now, that's against the 12% average, if you like, between 2014 and 2023. So it's quite a large and sudden spike in expenses. In fact, a lot of people are talking about this as the expenses attributed predominantly to AI. And could AI becoming a little bit of a bearish trend for the market? Well, pre-market, the price around the $417 per share. That will be down about 4% from its close on Wednesday evening. So we may well see a bearish gap on the opening on Thursday, potentially pushing that price towards the lower boundary of the blue channel. This gives us two possible scenarios. One, the bulls may well see that as an opportunity for another rebound. We may see some aggressive buying action. Secondly, or and opposingly, if you like, the bears could aim for a breakdown of that key support level, potentially trying to drive it all the way back down and test that $400 per share psychological level. So, expectation figures were surpassed, yet there were a couple of surprises in the report. According to TipRank's survey, analyst sentiment remains positive though. 27 of the 32 analysts surveyed have a buy recommendation for Microsoft shares, and the average 12-month target price is $503 per share. So could this be a short-term glitch, maybe a settling of that price? Nobody's quite sure. Certainly beating expectations, you would normally expect a positive result, but this is what happens when you dig down under some of those headlines. Anyway, we wish you luck with your trading in the week ahead. Bye for now.